Welcome back, my friends. Tech's earnings bonanza this week shines spotlight on growing troubles at Tesla Google. Tesla kicks off tech earnings on Tuesday with its stock at its lowest point since early 2023. Meta, Apple, and Microsoft report through Thursday, and each company faces its own set of concerns. The tech-heavy Nasdaq Composite fell 5.5% last week, the steepest weekly slump since November 2022. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. As tech's behemoths get set to report earnings this week, they do so facing a mountain of drama. At Google, there have been protests and restructurings, while Tesla just announced mass layoffs, price cuts, and a Cybertruck recall. Microsoft's OpenAI relationship faces fresh scrutiny, and Facebook parent Meta's major rollout of its new artificial intelligence assistant last week didn't go so well. The troubling news comes alongside a generative AI gold rush as big tech players race the new technology into their vast portfolios of products and features to ensure they don't fall behind in a market that's predicted to top $1 trillion in revenue within a decade. Wall Street has been openly jittery about the upcoming results, pushing the tech-heavy Nasdaq Composite down 5.5% last week, the steepest weekly slump since November 2022. Nvidia, which has emerged as an AI darling, plunged 14%, leading the slide. Whether this tech sell-off continues, I think, really depends on how the mega-cap tech reports, said King Lip, chief strategist at Baker Avenue Wealth Management, in an interview with Closing Bell on Monday. Valuations have definitely been more reasonable now that we've had a little bit of a correction. Lip said that in the last couple of weeks his firm has trimmed some of our tech exposure. Tech companies have been pouring record sums into emerging generative AI startups and investing heavily in Nvidia's processors to build AI models and run massive workloads. While that market is growing rapidly, investors are growing anxious that other issues at hand could lead to a pullback in spending. On this week's earnings calls, companies are likely to continue highlighting their efforts to cut costs and bolster profits, an efficiency theme that's been running across the industry since early last year. Tesla kicks off tech earnings season after the close of trading on Tuesday, with shares of the electric vehicle maker trading at their lowest since January 2023. Meta, coming off its biggest weekly stock slide since August, follows on Wednesday. Microsoft and Google parent Alphabet report on Thursday, giving Wall Street a close look at how businesses are planning their budgets for AI infrastructure. Here are some of the biggest issues facing the big tech companies in their reports this week. Tesla shares fell for a seventh straight day on Monday and are now down 43% year-to-date. Elon Musk's EV company is expected to report a decline in sales of about 5%, which would be the first year-over-year revenue drop since 2020, when the COVID pandemic disrupted operations. Tesla's earnings follow a bruising quarterly deliveries report and additional price cuts to the company's vehicles and its premium driver assistance system. Last week, the EV maker said it was laying off more than 10% of its workforce, and the same day executives Drew Baglino and Rohan Patel announced their departures. As we prepare the company for our next phase of growth, it is extremely important to look at every aspect of the company for cost reductions and increasing productivity, Musk wrote in a memo announcing the layoffs. 2 days later, Musk informed employees via email that the company had sent out incorrectly low severance packages to some laid-off workers. And on April 12th, Tesla issued a voluntary recall of more than 3,800 Cybertrucks to fix a stuck pedal issue depicted in a viral TikTok video. Since late 2023, sentiment on Tesla, TSLA, has deteriorated, wrote John Murphy, an analyst at Bank of America, in a note on Monday. Meta has been a good bet for investors this year despite last week's slip. The stock is up 36% in 2024 after almost tripling last year, when CEO Mark Zuckerberg told Wall Street that 2023 would be the company's year of efficiency. But Meta still faces plenty of questions. For one, its Reality Labs division, which houses all of the virtual reality technologies for the nascent metaverse, is expected to show a quarterly loss of over $4 billion for a second straight period. When it comes to AI, Meta debuted its assistant, Meta AI, on WhatsApp, Instagram, Facebook, and Messenger last week. It was the company's biggest ever AI initiative and is set to go up against OpenAI's ChatGPT and Google's Gemini. But Meta AI quickly led to controversy. The assistant reportedly joined a private parents group on Facebook and claimed to have a gifted and disabled child, sounding off in the comments about its experiences with New York area educational programs. In another case, it reportedly joined a Buy Nothing forum and tried to do free giveaways for non-existent items. Now Meta has to show that it's ready for what's certain to be a heated election season, as President Joe Biden and Republican Donald Trump prepare to square off for a second time. Dating back to Trump's successful presidential bid in 2016, Facebook has been a problematic place for political discourse and misinformation. Meta is expected to report revenue growth of 26% from a year earlier to $36.16 billion, according to LSEG. That would mark the fastest rate of expansion for any period since 2021. On a busy Thursday for tech earnings, Alphabet is likely to capture the most attention. Last week, Finance Chief Ruth Porat announced a restructuring of Google's finance department, a move that will include layoffs and relocations as the company drives more resources toward AI. On the same day, Google terminated 28 employees, according to an internal memo viewed by CNBC, following a series of protests against labor conditions and the company's contract to provide the Israeli government and military with cloud computing and artificial intelligence services. The dismissals came after 9 Google workers were arrested on trespassing charges Tuesday night, staging a sit-in at the company's offices in New York and Sunnyvale, California, including a protest in Google Cloud CEO Thomas Kurian's office. The arrests, live-streamed on Twitch by participants, coincided with rallies outside Google offices in New York, Sunnyvale, and Seattle, which attracted hundreds of attendees, according to workers involved. On Thursday, Alphabet CEO Sundar Pichai announced a consolidation of the company's AI teams, including responsible AI and related research teams, under the Google DeepMind umbrella. He said in a memo that this is a business, and employees should not attempt to use the company as a personal platform, or to fight over disruptive issues or debate politics. Pichai has struggled to quell employee discontent on a host of matters since the pandemic, as the company has been forced to reckon with slower growth than in years past, and an investor base that's become increasingly concerned with costs. Analysts expect a first-quarter revenue increase of 13%, which would mark a second straight quarter of year-over-year growth in the low teens. For 4 straight periods between mid-2022 and mid-2023, expansion was in single digits as advertisers pulled back due to soaring inflation and rising interest rates. Alphabet shares are up 12% this year, topping the S&P 500, which has gained 5.1%. As for Microsoft, the company seemed to narrowly avoid a European Union antitrust probe into its relationship with OpenAI, after EU regulators had pointed to the possibility earlier this year. Microsoft has invested more than $10 billion in OpenAI, whose ChatGPT chatbot kicked off the generative AI boom in late 2022. AI has been a major focus of Microsoft's earnings calls since then, as the company serves as OpenAI's key technology partner through its Azure cloud infrastructure. Microsoft has invested billions of dollars in AI startup Anthropic as well, and has taken stakes in Mistral, Figure, and Humane. The company's position in AI has been the biggest driver behind its ascent to $3 trillion in market cap, passing Apple as the most valuable U.S. company. However, the stock is only up 6.8% this year, trailing many of its peers, and some analysts see potential weakness in parts of Microsoft's customer base, notably small and medium-sized businesses. MSFT has more SMB and consumer exposure than any other stock we cover, wrote analysts at Guggenheim, in a note dated April 21st. And while those cohorts have held up surprisingly well during this soft macro period, we are starting to see some indications of weakening demand from them. Microsoft is expected to report sales growth of 15% in the first quarter, according to LSEG, but analysts are projecting a slowdown over each of the next 3 periods. Google has faced some challenges and changes over the years, which have led to concerns among investors and users. Let's explore some of the reasons why Google has encountered difficulties. Google Finance, a tool that investors use to monitor portfolios, view real-time stock charts, and read news for their favorite companies, underwent significant changes in 2017. The new version of Google Finance is now integrated into Google Search, providing limited features such as news stories, real-time stock and currency prices, and a minimalist stock comparison tool. However, many longtime users were unhappy with this transition, as it removed features like portfolios, performance comparisons, and upcoming events for companies. The old Google Finance had better tools and data than the current version. Investors miss features like portfolio tracking, performance comparisons against market indices, and event notifications. As a result, users have sought alternative tools from sites like MarketBeat, FinViz, and Wallmine to manage their portfolios effectively. Google faces intense competition from other tech giants, such as Amazon, Facebook, and Microsoft. The company's dominance in search, advertising, and online services has led to regulatory scrutiny and antitrust concerns. Balancing innovation while adhering to regulations is a challenge for Google. Google collects vast amounts of user data, which has raised privacy concerns. Striking the right balance between personalized services and user privacy is crucial. Regulatory changes, like the European Union's General Data Protection Regulation, GDPR, have impacted Google's operations. Google's primary revenue source is advertising. Changes in user behavior, e.g. ad blockers, privacy-focused browsers, and shifts toward mobile and video advertising have affected Google's ad revenue. The company must adapt to these trends to maintain its advertising dominance. While Google has diversified into other areas, e.g. cloud computing hardware, self-driving cars, its core business remains heavily reliant on advertising. Diversification is essential to mitigate risks and ensure long-term growth. Google faces challenges related to product changes, competition, privacy, and revenue diversification. The company must continue to innovate and address these issues to remain successful in the ever-evolving tech landscape. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.